All right. We're going to break down Friday's short in this video. This was from the Discord at like 10 a.m., 9:54. Just looking, at shorts. As price started to break down a little bit, we were interested in taking a short play there around 10 a.m. So 3 pictures there to kind of show you what we were looking at. And let's go ahead and get into the chart from Friday. So we were using these 2 arrays, this fair value gap here as a premium array. This one is a discount array with a breaker involved at 6 p.m. So that candle plus that gap, that's the entire array for longs. This entire fair value gap there is the array for shorts. And then we also have this 875 level, which is an equilibrium price cycle level between 23,750 and 24,000. So if we look into the morning, 830 NFP manipulated lower, ran higher up into 875. We tapped into the PD array, then we sold off. So let's go into the 1 minute chart and I'll show you what I was looking at in order to take this short. So 9:30 opens, makes a high. Okay. Let's compare. A lot of this trade has to do with the comparison of ES. So let's compare the two here. So right here, 9:30. They both open and run higher. We have a new high at 9:31 on ES. Okay, so that doesn't mean anything. NQ runs lower, and then we run higher one more time. So this is why I was interested in shorts. So the high is at 9:31 on ES. It makes a new high here at 9:49. NQ fails to make that high, so we can assume this would be the SMR high at 9:30. And this becomes the SMR high on ES at 9:49. The SMR high or low has to be the highest high or the lowest low candle, the wick, within a market maker model. So there, SMR 9:49, SMR here. So what does that give us? That gives us a breaker. All right, it gives us a breaker on ES, breaker, and that gives us a mitigation block here on NQ. Okay, mitigation, breaker, those are the most obvious PD arrays between these 2 highs and lows. And then what confirmed CSD initially was here, okay, this breaker right there, okay? So we have this high at 9:30, we have this low at 9:25, we have this high at 9:07. So that might confuse you maybe, I don't know. If it does, just know that it's simply this, okay? We have a high. Let's make that a high. Okay, we have a high, low, high, lower high. We have a high, low, high. Break that low. So we break that low, that becomes a breaker. Right there, that would be the breaker. ES, we have the mitigation. So we have the high, low, So if you just look at the left side of the curve, so this is the center line of the curve, all right, the SMR. Everything to the right side, everything to the left side. The breaker's on the left side of the curve. Okay, so you're going to use that as the CSD. So once we trade below that, that confirms CSD on NQ. However, we don't even have SMT at that point. So that we're not considering that at the moment until we make this new high at 949. Once we make that new high, SMT confirms, okay? Larger than 3 minutes, larger than a 3-minute cycle, SMT confirms. And then basically, once this candle closes on ES, once this 952 candle closes, that confirms the CSD. We're trading below the CSD on the left side of the curve, which would be the breaker. A breaker, inversion fair value gap, or the combination of the two are the only three things that can confirm CSD. And if you look at ES, what confirms CSD here would be a breaker. Okay, this breaker, it would be a fair value gap. You know, there's a tiny one here. I wouldn't really consider that to be something. And a combination of the two, which we don't really have. So we're going to use that breaker. So we have the 952 candle closure, confirms CSD. If you look here, 952, 952, that confirms CSD on both. And that could have been the initial short entry. So in NQ, we closed, we ran higher, tested the breaker, ran lower. That could have been the initial short. I waited until here, 10:02, until I got short. So right here could go short on a retest or already be short. Okay, so I knew I could have been short already, but I was being a little more conservative because we were bullish. And I really wanted it to show it to me. So we closed below here. This could have been your initial short up here. We closed below the mitigation block, the large mitigation block, and I entered short there on the retest, market entry. And that was the trade there. So once we worked below, I was very confident that this would hold and we would run lower at least for a little bit, okay? So we close here and right here at 10:02. ES at 10:02 is already significantly down below the CSD. So 10:02 is there. We're well below. So hopefully you can learn something there from that. CSD, the SMT, all that, that's very valuable. So if you need to rewatch that, go ahead and do that. But let's move on to the actual trade. So this is a market maker sell model, okay? And we have the left side of the curve. We have this original consolidation here with the 830 news low, NFP news low, okay? Sell side right there. So that's the initial target. So from here to here is the initial target. We displace below this mitigation, leave a fair value gap, come back and retest. We also have an SMT here on the 1 minute chart. So let's kind of zoom here. That way you can see there's an SMT. There's a high and a higher high. ES makes equal highs or a lower high. Okay, so that there's SMT on those highs as well. It's just not. It's sub 3 minute. It's on a 1 minute. It's a 1 minute SMT, so I don't hold a lot of weight on that. But stop loss for this trade. So entry here at 10:02. Stop loss above this array. Okay, this mitigation block was going to be the stop loss. And why do I have this marked and not this? Or not this? This could be your mitigation. You could use this whole thing, but I reduced it to this specifically because we have a high, lower high, higher high, lower high. So in this 1 minute chart here, if you zoom into the 15-second, you'll see a breaker between this high and this high. Take out that high, make a new low. That's a breaker on the 15-second chart. It's also a breaker on the 1 minute chart. So I used that specifically as the mitigation. If these were just consecutive lower high, lower high, lower high, lower high, lower high, I would incorporate the entire thing. But since we do have some liquidity taken from this previous candle, okay, I'll use that as the mitigation. Stop would be above this 959 candle high. That's the aggressive stop. Conservative would be above this 952 candle high. And then really, if you're expecting a low resistance liquidity run, you want it above here, because once we get below this mitigation, you want to see it used as resistance. If it doesn't, you're in a high resistance environment and you want to get out of the trade. And it's that simple. So entry here, price runs lower and just does exactly what I expected. Take out that low, take out previous 90-minute cycle low. Profit was taken here at 1020. I was going to hold for a longer run, but I didn't want to lose any money on that trade, so I just took profit there at the original consolidation. Price ended up running lower. Okay. So we came through 750, ran down to 625, almost got down to 500, and then we kind of consolidated right here at the equilibrium of prior week, equilibrium of prior day, and, just kind of chopped around for the rest of the PM. But it was a super nice delivery to the downside. Should have held probably longer, but I was happy once we got below Asia. Kind of, the trade was over for me. So that's the breakdown from Friday. Let me know if you guys have any questions about that.